Okay, guys, in this video, we're going to talk my top 10 coronavirus stocks to buy right now. So these stocks are severely either undervalued or to do extremely well due to the coronavirus outbreak. So what's basically been going on is that activity has basically shut down to a halt. You've got restaurants, gyms, nightclubs, lots of businesses have been shut down. And the bad thing about this pandemic now is that a lot of businesses are going to be closed down for good. So with people spending a lot of time indoors now, basically with no job to really go to, no school, events have been canceled. Everybody has kind of developed a brand new routine that's unlike something that they've been doing in the past. So where have all those eyeballs and attention gone to? Well, I'm going to give you guys 10 stocks that I think are going to do extremely well during this weird economic uh, period of time. So the sad thing is that a lot of businesses are going to go bankrupt, or a lot of small businesses are going to be out of business, and we should see unemployment skyrocket. This is that some companies will do better than they anticipated because they're going to experience a huge surge in demand, surge in new signups, and a huge surge in customers. So I want to keep this as helpful as possible, so I don't want to dive off too much because I have a lot of information to talk about. So if you guys enjoy my content, be sure to give this video a thumbs up and smash that subscribe button to get more videos that I'm going to post. With number one, and this trainer is going weird times, and that is Netflix. So a really popular household name, spending a lot of time indoors. They really don't have anything else to do. So watching Netflix is definitely going to be one of the most popular activities as inside. So much of Netflix's growth is coming from international markets, Europe, other parts of the world anyway. And I expect Netflix to see a huge boost in subscribers and just overall watch time because people are going to be binge watching in their houses with their family. They're not able to go outside and perform their regular routine. So I want to show you guys some of kind of these articles why I think Netflix will do really, really well. So I'll show you guys here. This was just posted yesterday. It says streams of the sharing platform Netflix rose 8.2% following upgrade to outperform from neutral by Bard Equity Research. The firm said that the rise of cord cutting could be compounded through the coronavirus crisis, provide a bigger boost to Netflix. And I want to show you guys another article that I came across. Very interesting stuff here. So here's another article posted on Investors Business Daily. It talks about why Netflix is a positive sign for Netflix stock. So this article was posted yesterday as well. It says the video leader Netflix put its networks in Europe is a clear sign that the company during the coronavirus. So it says Netflix on Saturday announced plans to lower in Europe to reduce the stress on telecommunication networks there. And basically what's been going on is that so many people have been watching Netflix at home in Europe that literally they had to contend with. So Netflix is definitely the place investors are hiding right now. It's breaking the internet in Europe, shows consumer demand. All streaming services face some content pipeline challenges come the fall, but that seems a world away. So basically, we view Netflix as one of the preeminent stay-at-home winners with the current environment enabling it to win the global lead. And then it also says RBC Capital Markets analyst Mark Mahaney said Netflix stock is a safe haven so far during the COVID-19 coronavirus crisis. He really on Netflix stock. We believe Netflix is isolated from the virus-induced recession as more regions around a varying degree of social distancing. Given a surge in streaming demands, people stay indoors. Netflix might literally break the internet. Guys, yeah, that's basically what's been going on with Netflix. So let's take a look at the stock chart here. So we head over to TradingView. So like I said, guys, Netflix definitely a clear winner for me. The stock has been pretty up and down, volatile as of lately. Guys, as Netflix chart, it's up now. This was bounced all the way up to about 390 back in February, and then we came all the way down to about right around $300 or so. So now we're going back up. So currently, as of recording this video, we're sitting at $360 per share for Netflix. I only own so I have a disclosure. I own one share of Netflix. I purchased it last year when Netflix was trading at around this area right here. I believe I purchased it in October. Anyway, I only have one share of Netflix as well. So me, I'll just be holding on to Netflix. I've been a Netflix subscriber for about 2 years now, and My family and my friends share a Netflix subscription. So for me, it's just a pretty straightforward stock that's going to do well from the coronavirus pandemic. Not much else to do in your home except, and with the quarantine, a lot of the social distancing, more people to keep their Netflix subscription and even add more subscribers in the future. So we could be headed to $400 Netflix. But for me, Netflix is just a stock I probably won't sell anytime soon. I probably I'll always have a share or two. Wish I could have bought another share when it dipped down here because I feel like anytime Netflix is under $300, it's a pretty good price, and people are going to stay away from it because of that high PE ratio. But the market cap isn't even a quarter of $1 trillion, and I consider Netflix to be in the same class as some bigger stocks like Amazon, Google, and stuff like that. It's just such a strong brand, and people really, really enjoy watching Netflix. So don't plan on them getting rid of their subscriptions anytime soon. Okay, so for the next stock on the list, the second stock is Facebook. So me personally, I don't actually talk a lot about Facebook stock on on this channel because I have kind of a personal grudge with Facebook. I think it doesn't necessarily help relationships in terms of people getting married and stuff like that. I think Facebook is pretty bad when it comes to keeping relationships together. But I digress. But let's talk about it in terms of from an investing point of view. So with jobs and schools on lockdown, Facebook is definitely going to experience a massive boost in usage during the coronavirus outbreak. And also communication becomes key at these times because how else are you going to keep in contact with your friends since you're not seeing them regularly, your coworkers, you're not going to work and stuff like that. So even me, I've even been logging onto Facebook a little bit more often. Even I really don't like using Facebook that much. It's been kind of crucial during these times to keep in touch with some people who I normally see and I haven't been able to see recently due to the global lockdown. So Facebook is another stock that I'm going to pull up here right now, guys. Okay, $500 billion market cap. That's probably one of the first times I've seen Facebook stock this cheap in a while, and was all the way up at 220 for this whole Corona world, and now we're sitting at around 140. Facebook stock side, I think Facebook is a wonderful long-term investment. People are using Facebook all the time, and it's a cash cow. It's an absolute. Facebook stock was around these levels was basically more than a year ago, back in December 31st. Let's say January 2019. So more than a year ago, about 13 to 14 months ago, Facebook stock was this cheap. And as you can see here, plenty of support at Facebook stock around $123. So like I say, guys, if you're looking for another company that I think is very straightforward, people use Facebook a lot. They're still increasing the number of signups and things like that. And the company is highly profitable and holds plenty of cash. And more people should be using Facebook in this epidemic. So during this pandemic. So I mean, I think this drop off in price is a little bit rash. Obviously, we're going to see a slowdown in advertising spending, but we're probably going to experience a spike in Facebook usage. So, spike in Facebook usage, more and more people signing up to Facebook to stay in contact with people during this whole coronavirus crisis. And then once advertising picks back up, Facebook will probably be headed to $300 or more. And it makes sense that Facebook would be considered a $1 trillion company within this decade. So, one of the things I'm waiting to see out of Facebook is will they ever pay a dividend? So, I was just sure if we can take a look really quickly. Uh, the numbers I want to talk about. Facebook, a highly profitable company with $6 earnings per share with a net income of around 18 billion and a gross profit of 17 billion and free cash flow of 21 billion. So Facebook has got a lot of money, and so I would like to see them somehow in this decade. I would like to see Facebook finally pay a dividend. I think if Facebook kind of takes the Apple route, stuff like that, perhaps pays a dividend, it'll be a stock that's a lot higher on my list of stocks to own. But right now, I still think it's number two on my list. I really think Facebook stock is a great buy, and they've got plenty of cash to weather this storm. So let's go to stock number 3 on the list. Okay, stock number 3 is simply Amazon. So the retail apocalypse, with all these malls closing down and everything, a lot of people are going to Amazon to buy stuff online, and so Amazon has already been destroying the whole shopping malls and retail industry in general, and now Amazon is going to experience a massive increase in orders, and they're recently trying to hire hundreds of thousands of new employees to meet the new demand. So let's take a look at Amazon stock, guys. I'm going to show you guys kind of what's going on with them and why I think this is a nice opportunity. So the bad thing about Amazon stock is that it's grown so much and gotten so big now that a lot of people think it's too late to simply own it. But I still think if you're kind of a long-term growth investor, I still think that Amazon is a nice place to park your money if you're looking to earn a return. So let's take a look. Okay, so here's Amazon. So again, another doing pretty well before the whole coronavirus. Shares actually fell. Wow, shares fell quite pretty far, 1,800 or so, and it looks like it rebounded. One of the reasons Amazon is a company that's absolutely highly profitable, and they're actually experiencing and during the coronavirus epidemic. So with no mall, turn to Amazon and other e-commerce for their basic needs. And this was kind of like almost the final nail in the coffin when it comes to retailers and shopping mall owners. Amazon was already taking their lunch, and now with closures for perhaps a month or more, I just don't see any point of some of these opening up at all. They're pretty much just going to close for good. Amazon revenue, an absolute monster, 200 from this coronavirus epidemic. So this currently, Amazon is under a trillion. It's probably going to be the last time you're ever going to see Amazon market time. So if you're looking at a stock that you're looking at kind of a defensive stock out there, a stock that can really benefit from the whole coronavirus epidemic, and the growth has already been achieved. But the funny thing about a company like Amazon is they're always hiring more and more employees so they can grow even more and more. Amazon become a $2 trillion within the next couple of years. It's really focused on the customer, and there's a lot of room to go in e-commerce. Search on thefool.com. It says Amazon hiring 100,000 more. So we all know Amazon products, low price. It's really popular right now because of the coronavirus. Data is very confident the company's new employees. Amazon hiring 100,000 people is just proof that the company is doing very well during time. Longer companies hiring aggressively, it's a good bet that management is very confident the company is going to earn an attractive return on those new employees. So basically, hiring 100,000 new employees is proof in the pudding that Amazon is seeing a huge demand for their services. So it also talks that furthermore, consider despite the long-term online shopping, e-commerce still makes up only 11% of overall U.S. retail sales. That means 89% of our sales is offline. But today, most of us aren't leaving the house, and when we do, trips like basic necessities like food and medicine. So there's spending that normally happens offline that just isn't happening right now. While it's unlikely all our spending will migrate online to Amazon, it's a very good bet that a portion will. So basically, guys, a lot more people are going to be using Amazon, and some people that were kind of don't like buying things online and stuff like that. They really don't have much choice right now because a lot of the shopping malls, or basically all the shopping malls throughout the world, are basically closed in most countries. Other than China, I think China's opened up a few, but out in Europe and most of Asia, Latin America, in North America, malls are closed. So a lot of that money is going to be going to Amazon. So Amazon is a great stock to own. I think it's a nice stock to own for even your retirement account. It's a nice stock to own if you're a millennial, if you want to kind of continue to grow with the company. You really can't go wrong with Amazon. And one of the things about Amazon is they don't pay a dividend, but a company like that, so well run, and as you see, only 11% of all e-commerce sales, 11% of all sales are online. So there's a lot of room for Amazon to go. So that's another stock that I think is a good place in your portfolio. So now moving to PayPal. So PayPal is actually a stock that's kind of been forgotten about. I haven't really talked about it much. I've been just holding on to a single share, and the stock has recently dipped down into a much more attractive level. So I want to show you guys kind of where PayPal stock is right now. So if you take a look at the PayPal chart, right, PE ratio of 40. So the stock is way down below $100. I do own a share of PayPal. I picked it up around 100, and the stock is a bit. So PayPal is a company that I use on a regular basis. I do receive some money through them. Being a freelancer in the gig economy and things like that. PayPal is definitely a stock that can benefit greatly from kind of the shutdown as well, because when people are buying things online, they're going to be using PayPal as one of the payment options. So a lot of websites obviously are accepting Visa and things like that. PayPal is a stock that can benefit from this downturn, and now it's on sale. So I'm going to just also mention one more thing about PayPal. So as online e-commerce increases, more people use PayPal in their peer-to-peer payment app Venmo to perform transactions online. So one of the things I actually read about the coronavirus is they said that the virus can get transferred through fiat money. So if you guys didn't know, US $1 bills, some of the dirtiest money out there. So more and more people might be using PayPal as a way to receive money, kind of to avoid cash transactions. And the PE looks nice, so I should show you guys the PE ratio is only about pretty solid for a company like PayPal. And this is a company that I use on a regular basis, so I'll be probably picking up another share or two very soon. And also I want to say lastly, as more people work from home in the future, PayPal becomes an important asset for freelancers and gig employees who use PayPal's wallet to send and receive payments. So the last thing about PayPal is that as we move towards a gig economy, I was reading some studies out there saying that U.S. unemployment could be up to 30%. Obviously, a lot of people are going to be looking for work, looking for freelancer jobs online. PayPal is one of the most popular ways to receive money. It's definitely the number one, pretty much the only way I receive money when I do work for clients and things like that. When I have sponsored guest posts on my website, as you guys are watching right now. So I think PayPal is in a good position, and I always like the stock. I've been using PayPal for years and years and years, so it makes sense for me to add to this position. I like PayPal anywhere under $100. Okay. So, stock number 5, Roku. So, Roku is a stock that I've been talking about so much in press videos. I haven't talked much about the stock lately because the stock had been down so much, and I felt like there were some other more attractive plays out there like Uber. A lot of my attention has been on Uber, but now I'm back on Roku because I just felt it was so cheap. So, as a disclosure, guys, I do own shares of Roku. I own about 10 shares of Roku stock, and I picked up about 5 extra shares at $75. And now, so let's just show you guys the stock chart of what we're looking at with Roku. Okay, so looking at Roku's chart here, as you can see here, Roku was a stock that I've been talking a lot about, but the price started to go down, and I was more kind of attracted to the time at Uber, but I still held on to my shares of Roku. So when Roku came down here and it kind of got really sold coronavirus epidemic, bought 5 more shares at around $75. So I own 10 shares now, and it's actually one of my largest holdings. I believe as I'm recording this video, the stock is up about it's up to about $95 in after hours trading. I don't know if those gains will hold, but basically I think this is a Roku stock, because Roku, for me, as I've been reading quarterly report after quarterly report, the numbers just continue to improve and to improve and to improve. And even though the company isn't they're not doing a ton of like net income and stuff like that, the company isn't so highly profitable and things like that. The latest year is negative, and their free cash flow is negative. But for me, it was revenue. So when Roku hit up over $1 billion in revenue over the last 4 quarters, that really perked up my ears and really made me pay attention to this company. And I actually used the product myself. Roku is basically a play the whole trend from cable to streaming. So Roku, it's like a digital streaming player. You guys can use it in your house. You guys can use it to watch anything like Apple TV, Disney Plus. It's like it's a hub, and it's also installed in a lot of TV. One of the nice things about Roku, it says Needham's Laura Martin sees a clear some so-called state relatively well in the recent market downturn. On Monday, one analyst discussed a stay-at-home battle between Netflix and Roku. Needham's Laura Martin reiterated her 200 and her underperform on Netflix. I think Netflix and Roku can benefit together because when you're in your house, there's really not much else to do during this whole global lockdown. And the nice thing about Roku, I think, is that Roku has a lot more growth. So as I showed you guys earlier, Netflix has a much larger market cap, and the PE ratio for Netflix can be very sky high, which can shy some of you guys away. But Roku, $10 billion market cap here, a lot of more room to run. So if it hits our price target of $200 by the end of the year, this could be a potential opportunity for you to double your money. So for me, I'm just basically been adding my shares of Roku. I'm holding on to 10 shares right now. Hopefully, if the price stays below $100, I would like to add some more. But I also bought a lot of stock in Aurora Cannabis, and I wanted to trade some stock options as well. So I couldn't do everything, but I got some shares of Roku. So this see what happens with this one. But for me, I'm going to be as long as I'm using the product on a regular basis. So let's go, guys, to number 6, Walmart. So during crises like these, people stockpile items like food, water, and medicine. Walmart is hiring 150,000 temp workers to deal with demand as Americans stock up on essential items. So I know a lot of people out there are worried about stocks that are cutting their dividend, and that is definitely a problem. I think recently Ford has cut their dividend, Macy's cut their dividend, Boeing cut their dividend. So for a lot of you guys out there that are dividend growth investors, if some of your stocks are getting their dividends cut, that kind of defeats the whole purpose of owning them. And a lot of these stocks are already down, so you could have potentially lost capital gains and your dividend as well. So that those are losses that won't necessarily come back anytime soon. So if you guys are looking for a stock that pays a nice dividend, it's a dividend aristocrat. Aristocrat meaning that it's increased its dividend for 25 years straight. I think Walmart is a pretty safe bet here. So let's take a look at the stock chart. If you look at the Walmart chart here, you know, some of the other tech stocks that I've mentioned, but the safety and the consistency of Walmart, and during has been down well 50, sometimes 80%. Safety and consistency is what a lot of the nice things about Walmart is that you can know we've been going through coronavirus crisis. We really haven't seen a huge drop off in shares. We did Walmart stock kind of go down to around $100, but it's bounced quickly back to around the $114 range. So basically, Walmart has been hovering between around $100 and $120 for the looks basically the last 6 months or so. So that's the kind of the safety and the consistency you're looking for in a company like Walmart at a 20 PE of 20 and a 9 as well. So you don't have to worry about Walmart going bankrupt or something like that. So with some of these other smaller companies, it's really hard to figure out if they're even going to be around when the global lockdown ends. So let's take a look at this. Walmart is hiring 150,000 coronavirus crisis says. It may seem counterintuitive at a time where Americans are sharply curtailing much of their spending. The retailer shares would flirt with all-time highs. But this week, Walmart stock briefly reached an apex as analysts said the discount retailer's infrastructure and merchandise mix put it in a great position to benefit from changing shopping patterns long after the coronavirus eases. So basically, America's world's largest retailer, you would expect people to be running to Walmart to stock up on items. So I think Walmart and Amazon, these are basically the two biggest beneficiaries, and they've already been kind of getting rid of small business owners and small businesses for quite some time. And during the coronavirus, we're only going to see that trend continue. So if you guys are looking for kind of two safe and secure plays, I would say Walmart and Amazon are two very nice ones. I already mentioned Amazon, so this is basically about Walmart. But the thing about Walmart that I like is that they pay a dividend. So for you dividend growth investors out there, Walmart can be a nice stock, a defensive stock that you can add to your portfolio right now. Okay, so number 7 is Upwork. So Upwork is a bit probably unknown to some people out there. It's one of the smaller stocks out there. It's not nearly as big as some of the large caps that I've mentioned. But I think I've already talked a bit about it in some previous videos, if you guys seen them, about how we're moving from a shift to a gig economy and more people are going to be freelancing. And Upwork is the largest freelancing site in the world. So with so many people that are going to be losing their jobs and getting laid off, a lot of people are going to be looking for ways to earn some extra income. And I think desperate professionals are going to be looking for freelancing online for the first time. So let's take a look at the Upwork chart, the stock. Okay, so Upwork is a stock that I've been watching for quite some time now. I actually use the site myself. I use it mostly to hire professionals. You can find a lot of very, very talented people on a site, and you can also use it to find work as well. So they have lots of different jobs on there, things like writing, design jobs, over talent, programming, basically lots and lots of different ways to get in contact with highly skilled professionals. So I've been watching the stock for quite some time, and the stock IPO'd. I believe it IPO'd at around $18, $20, right around that range, and then the stock just dropped like a tank. So currently the stock is at a $730 market cap, $730 million market cap. And let's take a look at the latest revenues. The latest revenue over the last year or so was around $300 million. So the company is not currently profitable, but I think they're very, very, very well positioned to kind of benefit from the transition into more and more people working from home. And this is the largest freelancing site in the world. So at around $6.40, this is stock is more than about 75% off of uh, its all-time high, and I think it's a compelling buy. So obviously a lot of people are going to shy away from it because the company is so new, but I've used the site as well myself, and you can find some really, really talented people on there for some very good prices. So this is definitely a stock that should improve a lot because a lot of people are going to be out of work, and they're going to be looking for new ways to make money through the internet. Upwork should see a nice big uptick in signups and just overall activity on their site. But this is a speculative stock, guys, so this is not like any of the other recommendations. This is just a stock that I think could benefit from the coronavirus that's going to put a lot of people out of work for some time. So, hey guys, so number 8, I want to talk about Uber. So I've been talking a lot about Uber, guys, and I say Uber is basically my retirement plan. And I posted a video recently on Uber. I said, is Uber still a good buy? It's $21 now, so you guys can check out that video if you want to go more in depth on Uber. But basically, the nice thing about Uber is they were already doing really, really well with their ride segment, and now that there's been a global lockdown, obviously people aren't going anywhere, so rides is probably going to go down like 50 to 80% in general. But what we've seen a big boost in is with Uber Eats, and that was already like the second highest grossing segment in Uber, and a lot of people weren't really using it. So if you guys check out the previous video, I mentioned how Uber has seen a tenfold increase in restaurants signing up for Uber Eats. They've landed some pretty big clients like Chipotle and things like that. So basically, people just have no choice but to order food right now because they're not really allowed to go out and buy anything other than like basic things like food and groceries and medicine. So a lot of people are actually on quarantine or lockdown complete when maybe the local restaurants or the local grocery store isn't even open. And with only dine-in orders, if you still want to order things like pizza and stuff like that, you're going to be using Uber Eats. So another positive sign from this is that it's also possible that Uber Eats is going to bring in a lot of fresh people to the app in general. Maybe people that have kind of shied away from Uber, maybe people that basically just use public transportation most of their lives, or perhaps they were, only riding things like their bicycle or something like that, or they even had a car. So just getting more people using the app is good long term because even though a lot of restaurants aren't having dining customers, they're still delivering. So that segment of Uber will improve quite a bit. I think Uber Eats is a big, big long-term potential. As I mentioned in the previous video, you guys, I just recently started ordering food through the Uber app in the last year or so as well. So I'm basically putting my money where my mouth is. So guys, check out that video. I want to move on to the next stock, but I want to quickly go on to the Uber chart and show you guys where we are right now. So the company IPO'd at around 45 $56. So that basically the stock is around 50% off. For me, Uber is $1 trillion company within the next 5 to 10 years. Not exactly sure when that's going to happen, but for me, I'm just stockpiling shares as much as possible. But I'm not buying in the big bunches. I'm just buying a share here, a share there, and slowly adding to my position. So that's number 8 for my top 10 coronavirus stocks. So number 9 is Google. So Google, basically, this is for me basically a no-brainer. Along with Netflix, Roku should see a boosting usage. Google and YouTube should see a spiking usage as well. I know for myself personally, as I'm basically staying at home basically most of the day, other than to go out and buy like little pick up food or stuff like that when Uber delivers to me. I'm spending a lot of time on Google Reading, and I'm watching a lot of YouTube videos. So I'm pretty sure I'm not the only person that is going through that as well. And obviously, we might see a slowdown in advertising spending. We should see that rebound once the dust settles in the coronavirus epidemic. But I'm pretty sure Google servers and YouTube servers are just seeing a nice spike in activity, which is always good for long term because it's going to bring in a lot of people, and maybe a lot of people that weren't, on social media as much. With not much else to do, perhaps there are more people signing up for YouTube accounts, more people signing up for Gmail accounts, things like that. Just more people kind of introduced to the internet, whereas in before they had so many obligations with school, kids, their work. Now they have a lot of downtime. The internet seems like the best option with social distancing going on. So let's quickly take a look at Alphabet stock. So probably for the first time I've seen in a long time, Alphabet, the Google parent, had a price to earnings ratio of 21. Google Alphabet stock in a very, very, very nice value territory. For a lot of guys here who thought that the stock was always, this is a pretty nice buying opportunity. We were around this price in June 2019, and it looks like we found a bit of support at around $1,000 a share. The stock was just, it was $1,500, a little more than a month ago. So basically, your Alphabet parent company at around a 33% discount. It's going to be Google. Google make a ton of profit, extremely well-run company, and a company that is going to see more future. Obviously, it's seen a lot because people are at home and they don't have much else to do other than go on the internet. But for me, this is my chance. I've always wanted to own shares of Google. I use Google services obviously every day. I'm using Google Search as I speak, showing you guys articles and things like that to provide support to my claims and my videos. I actually have Google Ads on this advertisement is through Google AdSense, and this is an advertiser that's spending money through the Google Ads network. So it makes sense that I would finally become a shareholder in 2020. It's been long enough. I've watched the stock IPO over the years, and I never really got in on it. But for me, this is the time. This year, I'm going to finally become a Google shareholder. So I do actually own some partial shares through the Stash app, but I want to actually become a whole shareholder this year. So my goal right now is to figure out a way that I can kind of rebalance my portfolio and add Google as a position, because I just think it's such a solid run company, and at 21, a price to earnings ratio of 21, I don't know how much longer I'll see it for this cheap. So for me, guys, you're looking for another way to stash your money, and you want to park it, and you're kind of looking for some undervalued stocks. I think Google is in a great spot. It's been down quite a bit, but Google stock is trading under $1,000. It's simply too cheap. And right now, does it make sense that Google has lost 33% of its market cap due to the coronavirus? I don't think so. So let's move on to 10th and final stock, and that's Aurora Cannabis, guys. So Aurora Cannabis is another stock that I've talked a lot about in my previous videos, and a lot of you guys are hating, saying the company's going bust, and I know the stock has lost a ton of value, but all of the cannabis stocks have basically been crushed because basically they were highly overvalued, with basically the legalization of cannabis in Canada last year. A lot of these stocks were trading at ridiculous levels. It kind of reminds me of the whole dot-com crash, of how stocks were just ridiculously overvalued. So one of the nice things is that Canada has allowed cannabis sellers to remain open during the... Okay, guys, so for number 10, my 10th and final stock to buy right now is Aurora Cannabis. So Canada is allowed during the COVID-19 outbreak, a massive surge in sales. So consumers are stocking up on cannabis and other related products in case stock. And use is something many people do in isolation. So as we're social isolation and things like that, a lot of people will be turning to cannabis use, recreational purposes as well, to deal with their social isolation, to deal with anxiety about the world, the economy. It just seems like we're going to be dealing with cannabis and related products to kind of cope with this crazy situation that is the coronavirus. So I wanted to show you guys a article talking about how talking about this a little bit more in depth. Okay, so it says amid Canadian cannabis stores see unprecedented fight a worsening coronavirus outbreak. So it says executives told there is no threat to supply the measures have been put into place for employees and consumers. So basically, what's been going on is that sales have just skyrocketed, and the government in Canada has actually allowed a lot of these dispensaries and sellers to remain open because a lot of people use cannabis for medicinal purposes, and they haven't forced these sellers to close down. So as you can see here, they're just basically talking about a marked increase in volume in sales. So it says sales in Ontario's monopoly online cannabis store, but some of that increased demand was attributed to lower prices. The government aggressively dropped prices on some products as part of an ongoing drive to improve competitiveness. So as you can see here, sales have been up a ton. Some of the stores have dropped prices, but as you can also see here, it says retail stores are reporting increased customer volume. Saturday saw almost 3,000 orders, an 80% increase over an average Saturday. So what a lot of people are doing is that they're basically stocking up on cannabis and things like that, vape, stuff like that, because they're afraid that there's going to be a shortage. So the good thing about it is that the government has allowed them to remain open. That money that was being spent on other things like spending such as clothing, stuff like that, other different types of foods, movie theaters. A lot of that money is going to cannabis sellers. So Aurora Cannabis is basically my favorite Canadian cannabis stock out there. It's extremely cheap and it's priced well under $1 billion in market cap. And if you take a look at the price to sales ratio, which is one of the cheaper ones, I believe Canopy Growth's price to sales ratio is well over 10. So Canopy Growth is too expensive for me, but Aurora Cannabis is a much better buy. So I want to show you guys also another metric. Now, I usually don't use this metric because in most cases, the market cap is in line with the enterprise value. But as you can see here, Aurora Cannabis has a market cap at over 2.6 billion. So even if we were to say that this enterprise value number is overvalued, even if the enterprise value is just half of this, which is 1.3 billion, that still means that you're a deep discount. But looking at these numbers here, that means that the company is about 60 to 80 on sale. So, for me, it's just a great opportunity. Aurora Cannabis. I think you guys can do well with any of these cannabis stocks, so I expect them to see a nice increase in sales for the next couple of quarters as people stock up on cannabis. So Aurora Cannabis, Tilray, those are some nice ones. Hexo as well. The only one I don't like is Canopy Growth. I think it's overpriced right now due to the price to sales ratio. So that's it, guys, for my list of top 10 coronavirus stocks. If you guys want to see the article that I'm referring to, just click the link in the description so you can read all of the stocks as well. And these are the companies that I think can are positioned to do pretty well in this horrible time. So guys, I hope you enjoyed this video so much. I put a lot of time into it to give you guys some investment ideas. I've been reading around in some forums and stuff like that, and people have been asking for a list of stocks to buy because of coronavirus. So these are my top 10 coronavirus stocks to buy right now. And if you enjoyed this video, be sure to give it a thumbs up and subscribe, as I'm going to be posting more informative videos for you guys in the future. Thank you so much for watching, and please stay safe out there and have a blessed day.